In the long-term view, and we suggest to anybody that's purchasing them, please, if you do purchase, plan to stay in for at least 3 to 5 years. And then, if you look historically, you'll see gains.
Welcome to the Wealth Strategy Secrets of the Ultra Wealthy podcast, where we help entrepreneurs like you exponentially build wealth through passive income to live a life of freedom and prosperity. Are you tired of paying too much in taxes, gambling your future on the stock market, and want to learn about hidden strategies for making your money work for you? And now your host, Dave Wolcott, serial entrepreneur and author of the best-selling book, The Holistic Wealth Strategy.
Hey guys, welcome to today's show on Wealth Strategy Secrets. Today we're joined by Lewis O'Connor. Lewis is the founder and principal of Strategic Metals Invest, providing a unique opportunity for private investors worldwide. They're the sole industry supplier that allows individuals to purchase and benefit from owning strategic metals. With their Europe-based operations, they offer North American clients the much-needed advantage of geographic diversification. Lewis, my friend, welcome to the show.
Thank you very much, Dave. Delighted, very happy to be here with you. Thank you.
Yeah, no, I'm super excited, to talk about this, really unique offering that I think most people probably aren't aware of. Most folks are just kind of inundated by, Wall Street and stocks, bonds, and mutual funds. And I think, the first thing that comes to mind when you talk about precious metals is people will think about, gold and silver. So really looking forward to kind of understanding, the market dynamics and the specifics around some of these precious metals. But before we start to unpack the precious metals, tell us a little bit about, your background, your journey, and how you really got into the space.
Sure. Well, as you can probably tell from the accent, I'm not Ohio-based or born. I'm Irish. I'm from Dublin originally. Coming to you today from Tipperary. Our business is European based, but we'll talk about that more in a minute. So yeah, I'm just back to Ireland, Dave, actually, after 25 years traveling the world, really. I lived in Germany for 10 years, speak German. And then I went to Latin America, mostly based in Panama, Central America, but also sort of did some business and stuff in Colombia, Nicaragua, Belize, and actually usually are mostly working with North Americans and Canadians. In Central America, it was more property and real estate. But although I've never lived in the US, funny enough, I've worked with North Americans most of my life, even when I was in Germany. So I came back to Europe 3 years ago specifically for this business because it's a sort of a relatively new asset class. And, there's a great story behind it, which happens to be true in terms of supply demand, which we'll get into. But yeah, that's pretty much it.
Interesting. So was there something that kind of got you into the precious metal space kind of in your career that led you this way?
It was just really, we always live in an age where there's something new coming around the corner, right? Not everything works out, but I mean, if we look at just the last 20 years, some of the companies we know so well today probably didn't exist maybe 20, 25 years ago. So just, I'm thankfully still curious, although I've traveled all over the world. I love to hear anything, a new book, new movie, whatever it might be. But from a business perspective, I'm always looking for a niche, I suppose. Something new and something where there's a real story of, in this case, it's the demand supply dynamics. There's a genuine, nobody in the world would argue demand for these raw materials is increasing, while at the same time we have one country that monopolizes the market. And the next sort of 5-10 years, the last 10 years have been very profitable. And as we discuss, there's about another 5, 10, 15-year window of opportunity there as well, specifically in rare earth elements.
Great. So why don't we start with kind of just talking about, what are precious metals, specifically, which ones are you talking about? Where can you find them? And let's kind of begin there.
Yeah. Well, I'll break it down because you're using the right term there, precious metals. So they do come under that umbrella term, right? My company is called Strategic Metals, and the reason for that simply is strategic obviously is not a scientific term, but strategic is strategic to our daily life. I mean, just to give you one example, like just say my smartphone here, there's in every smartphone today, there's 12 or 13 precious metals. And there's some gold in your phone, there's a bit of silver, but the other 10 are the ones that we offer as physical assets. And the same, for example, you couldn't, we see and touch them and feel them every day. One of them is indium. You can swipe your phone because of indium. There's gallium, germanium, hafnium. And for example, the metal or the oxide in the speaker in your smartphone, to be more precise, in the permanent magnet, is the same metal that's in permanent magnets in electric cars, in wind turbines, in solar. So they have multiple applications, yet we just sort of rarely think about them. We generally just think about gold and silver, and gold, does have some industrial use, but mostly jewelry, but silver has more industrial use. But these raw materials are specifically used in the industry. And you quite rightly said, Dave, most people wouldn't have heard of them as physical assets. And the reason for that is, as I said, it's a relatively new asset class. It's only since about 2010 private investors can physically purchase them. It's the exact same paradigm as gold and silver, except you're buying and purchasing rare earth elements, which are, supposed to have an intrinsic value, as opposed to, in many ways, gold has a sort of an extrinsic perceived value because it's, mostly purchased as a store of wealth. Whereas these raw materials have an intrinsic value, and, there's probably not an industry they're not used in. I mean, semiconductors for computers and, all modern technology, medical devices, electric cars, aviation, rods for nuclear reactors. The space exploration is becoming a fully fledged sort of space industry over the next sort of 25 years. So they're critically needed there as well. So yeah, we just, a lot of people are surprised and go, yeah, how come I didn't think of that before? Because in your phone, you touch them and see them every day,
Yeah, sure. So where do you typically mine these, right? And what is the supply side actually look like? Are some of these, plentiful, or are they still rare, like gold would be, for instance?
Yeah, great question. So despite the name, they're called rare, the scientific term is rare earth elements. So they come in metal form and oxide form, which is powdered, even liquefied, and in nitrate form. But despite the name, they're not all that rare. And there's plenty of them in North America. Mountain Pass in California, actually, until the 1980s, was the largest producer of rare earths in the world. But what happened was, rare earths, really, we only found applications from them, believe it or not, in the 1960s, when we went from black and white TVs to color TVs. That's when we really started to use them. But, I mean, as we all know, 20 years later, in the 1980s, when the technology, this is when they really came in to, being needed in just about everywhere. So they, since the 80s is when they're, everything from a toaster to a microwave pretty much nowadays has a mini computer in it. And these are critical in all technology. But where the supply demand dynamic comes in, and I'll just tell you, like, China is responsible for 90% of the world's rare earths. And obviously that's not a good thing, because I suppose really what happened, Dave, as an unintended consequence of globalization, I mean, for the last 2 or 3 decades, when the world was sort of high on globalization, we sort of didn't worry too much about the fact that it wouldn't be a good idea for one country to control one raw material that's critical to any nation's economic prosperity and increasingly military capability. So what happened during the 80s was China, actually, the people can Google and you'll see this, the premier of China at the time, Deng Xiaoping, standing on a rare earth mine, said that the Middle East has oil, China has rare earths. Now, that was a very, very shrewd statement in 1987, because right after that, the technology industry sort of exploded, or it was already happening. And really what happened was China understood before Europe and before the US that these rare earths would become literally the backbone of manufacturing in the 21st century. So they were about 25, 30 years ahead. Now, at the time, and I'll speak about the US just because I know your audience is North American, but at the time, the US government thought, because we were a little bit high on globalization, we thought, well, look, what China started to do was move all the refining from Mountain Pass in California to China. Now, at the time, I think the US government thought, well, look, separating and extracting and refining these raw materials, it's complicated, it's messy, it's expensive. Why don't we let the Chinese do it inexpensively, and we'll just buy the raw materials cheaply for them? So what happened then, though, was the US set up a bureau of mines to keep an eye on so the US could remain competitive. And that bureau was defunded in 1996, and literally what happened since then is China now monopolizes rare earths. And the key thing I need to tell you why is the refining important is because rare earths don't occur naturally, and they're always a byproduct of another raw material. So, for example, gallium is a byproduct of aluminium, or you guys say aluminum, we say aluminium. Gallium is a byproduct of aluminum mining. Hafnium, which you need in jet engines and rockets, is a byproduct of zirconium mining. To give you some context, the ratio is 50-1. So for every 50 tons of zirconium, you can only get 1 ton of hafnium. So they're rare in that respect. Although you could find them in any continent, finding them in sort of high grade, they don't occur naturally, and they're chemically, they sort of exist together. So they have to be extracted, they have to be separated, they have to be refined. That's complicated, it's expensive, and we've allowed the Chinese to sort of run away with the circus there. But very, very recently, both Europe and the US have realized, we have to wean our dependence off China. And that's why they're a good investment right now and over the next 5 or 10 years. I think I covered everything there.
Yeah. Okay, so that's pretty interesting, right? So you talked about California as one of the mining locations. I'm assuming there's others kind of across the world outside of China. Talk to us a little bit about the infrastructure. It's kind of interesting that it's really a byproduct, right, of something else. But tell us a little bit about the infrastructure. I mean, is it miners, similar to gold and other things that you hear? How we're actually extracting these precious metals? And then what does the supply chain look like? How are they getting it to market? How are they making it, are they selling them direct to semiconductor companies, car companies like Tesla or whatever? How does that work?
Okay, so you've just touched on a good point there. Like, first of all, like who we are as well and what we have on offer. So it's probably the most important thing I might say today is the fact that, and this might sound like a little contradiction or a paradox, but the most important thing about us is not this investment offer that we have. It's the most important thing is that our core business, 80% of our activities on a daily basis, is we're a supplier of rare earths. So we turn over on the industrial side of the business about $100 million a year. So our office is in Frankfurt and the vault is in Frankfurt. So what we're doing and what we have been doing for the last 30 years is we buy the raw materials directly from producers who are mostly in China, but also, in other places as well. And then we resell them to industry buyers. So to be exact, at last count, we've 2,480 industry buyers in 70 different countries. So we'd have plenty of clients in the US, plenty in Europe and the Far East. So that's our core business. That's what we're doing 80% of the time. And it's only because of that we can offer, as you guys in America like to say, the side hustle. The side hustle is the investment. But if we weren't in the industry, if I was just a sales and marketing guy in Tipperary in Ireland, I'd be crazy because I've no connection to the industry. The only end buyer for these raw materials are industry buyers, as you said, Apple, Siemens, Volkswagen, Ford Motor Company. So the only way this works is if you're buying from an industry supplier, unless you're a hobbyist and then you go to eBay or Amazon and you buy small amounts, and you would have no idea what the purity levels are anyway. But to give you just some context on what you said about the sort of infrastructure, there's one mine in America, North America, producing rare earths, and they still, which is Mountain Pass, but they have to sell all their raw materials to China to be refined, because the human capital, the engineering expertise that existed in America in the 80s is completely gone. To give you some context on that. Now, that's all going to change, Dave, because the Inflation Reduction Act has billions of dollars in subsidies for people to refine rare earths in North America. You will see some investment coming into North America, but the current status quo is China refines 90%. To try and give you an idea, there's 39, the critical type of person you need is a metallurgist. You need geologists and a metallurgist, which is the degree needed for the refining. So China has 39 universities graduating degrees in critical minerals. You know, they've probably got about 200 degrees, 200 metallurgists graduating in a week, every week for the last 30 years. The US only has a handful of universities with degrees in critical minerals. So I suppose to give you further context, there's about 300,000 metallurgists in China. There's maybe 400 in North America and none in Europe. We're completely dependent on China at the moment. Now, Europe wants to change that. America wants to change that. And this is why it's such a good opportunity for investors right now is, it took China a generation to become a sort of a global rare earth superpower, so much so that they can weaponize rare earths now just by restricting them. So we're in this sort of very unique window of opportunity for the next 5-10 years where investors can hold them, physically store them, and just watch them go up in value and liquidate them, once they've, realized, whatever number they want.
Yeah, got it. So how does the investor participate, in this type of opportunity?
Okay, so it's the same paradigm, as I said, as gold and silver. So the investor physically owns the asset. It's not a share or a piece of paper. They physically own the asset. So what I suppose you could say we've three guarantees, or maybe our warranty statement is three things. One, we guarantee that the client is purchasing industrial grade, high value gallium or germanium or indium, whatever it might be. We're guaranteeing the purity levels, we're guaranteed the chain of custody, and we're guaranteed that what they purchase can be liquidated to an industry buyer at any time. So they qualify for that industrial grade. And obviously, as an industry supplier, we know what industry buyers want. Just like gold, there can be different purity levels. There's also different forms. Some of them are in powdered form, but we know what we can liquidate, and we also provide the exit. But in the meantime, there's storage. We have a storage facility in Frankfurt in Germany. It's in the banking district. It's 2 levels below ground. It's 1 above. It's a bank level secure vault with, 2-meter walls and 2-meter door. It actually was a bunker in World War II. And then after, during the Cold War, and we bought it in 2010 and invested in it. And now it's a fully sort of secure, fully insured. We store precious metals there as well. So we also provide storage in a sister company of us. And then the last part is the exit, which is we guarantee to liquidate the raw materials when the client is ready to sell. Now, that's not their only option. They own the raw materials. If they want to find a buyer themselves, they can. But since we're an industry supplier and that's really the only end buyer, we do obviously responsibly have to provide that option. So we guarantee to repurchase them, at a current pricing, whatever that might be.
What if everything you thought you knew about investing was wrong? Would you like to create a wealth strategy like the top 1% have and get exclusive access to top private equity deals that provide downside protection, tax efficiency, predictable cash flow, and have a lucrative upside? Discover how with the Pantheon Advantage and join our investor club today at pantheoninvest.com.
Okay. So how is the investor really, kind of making money? Are they looking at appreciation off of these metals? Is that the primary play? Is this a hedge play by saying, okay, now you have strategic metals in your portfolio, right? If the dollar continues to devalue, now I have a certain allocation set to these strategic metals. So is it more of like a hedge play? Or is there anything else in terms of, how investors really can profit from this?
Okay, so at the very minimum, it definitely is a hedge against inflation. It's a store of wealth because you own an asset, a hard asset has an intrinsic value that's in demand in every country in the world. So at the very minimum, yes. However, because of the, political instability, because of trade tensions, there's other dynamics that come into play. But just to give you an idea, there's 10 of them that we offer. If you'd purchase, say, $100,000 of all 10, so it means you're diversified in different sort of industries 5 years ago, your portfolio would be up an average of 34.25% a year. Some of them are up, one metal's up 500% in the last 3 years, one's up 6%. So that's just the average numbers. So because of this, supply-demand disparity, they actually have been historically increasing in value. Now, what's coming next? What does the future hold? Well, as I said, just 3 weeks ago, or less than 3 weeks ago, August 1st, China has restricted the export of gallium and germanium, probably to the US, Japan, and Holland, because they're sort of in a retaliatory situation at the moment. So, it's a speculation, much like everything else. There's no guarantees. But if you do your homework, if you, really see what's hidden in plain sight, you'll see that demand is off the charts. Gallium, as an example, between now and 2030 in Europe alone, we'll be consuming somewhere between 7 to 26 times more gallium than we are today. And there's probably just not enough of them. What's very interesting for the moment, Dave, in the next 10 years is what we call the energy transition metals. There's 5 of them, which are the raw materials for electric cars, solar power, and wind power, also needed in batteries and stuff. There's going to be huge growth there because there literally will not be enough of those raw materials for every car manufacturer to go electric, which is what they want to do. So I can't say, oh yeah, they're going to go up X amount in value. I just can't, because they can also be sort of volatile in the short term because China sort of, controls the pricing. But in the long-term view, and we suggest to anybody that's purchasing them, please, if you do purchase, plan to stay in for at least 3 to 5 years. And then, if you look historically, you'll see gains.
Got it. Is there any tax efficiency strategies in terms of purchasing these metals, or like you had talked about, is the government putting out any, subsidies or incentives, in the form of tax breaks on this?
Well, if you store with us in Germany, our vault is it's a Zollager, which is a duty-free zone. So it's exactly the same as if you were storing in Switzerland or Singapore. And if you hold the raw materials for a minimum of a year, then there's no taxes when you purchase and there's no taxes when you sell or when you liquidate. However, obviously, Uncle Sam, I know, has global taxation. So, capital gains would come into it for North American clients. We have had recently a number of our clients go to a custodian and use a self-directed IRA, a checkbook, I think they call it a checkbook IRA, to purchase, which means when they sell, then I guess the gains and the profits go back into the pension, and the tax is either deferred or, I'm not sure, obviously you don't want to take tax advice from an Irishman in Tipperary, but yeah, I mean, I do know the US is maybe one of 2 countries that has global taxation. So they're tax-free in Europe if they're held for a year, but after that, then the client has to do their own reporting in their own jurisdiction.
Yeah, got it. So you're basically looking for that appreciation play And within a 3 to 5 year period is really kind of what you're looking for that sweet
Exactly.
spot.
Exactly, yeah. I mean, gallium and germanium in the last sort of 3 weeks are up, I think, 10% and 15% since China announced these restrictions. So yesterday, US president announced some sort of retaliatory measure. So we think things are really going to escalate. The last time China restricted the export of rare earths was over 10 years ago. In 2011, the Japanese detained a Chinese captain of a trawler who was fishing in sort of disputed waters. And in retaliation for that, China restricted the export of rare earths to Japan. And we saw prices sort of, 5x, in the space of a few months. So for the first time in over a decade, China is now weaponizing rare earths again, this time against the US, Holland, and Japan again. So, mostly my conversation with clients is to say, look, for sure, at the minimum, this is a good store of wealth. And then in the middle, likely you should comfortably see, maybe 15, 20% a year, just because demand is increasing and supply is limited. However, if things escalate and China decides to really weaponize them, you could, like I said, like terbium is up 500% in 3 years. I mean, they even without restrictions, they're outperforming precious metals,
Lewis, what would be the biggest risk in this type of investment?
Okay, so I'll start with the business itself. I mean, you're purchasing from an industry supplier. Any business can experience difficulties or go out of business. But all I would tell you is that, we're in business since 1999. We've held a ISO 9001 QM management certificate, quality management, consistently since 2003. Our product is a product that's in demand worldwide and is increasing. So the business itself is as safe as any business can be. I mean, it's actually growing. We've moved to a bigger office this year. We're purchased land where we're actually going to build another storage facility, another vault also in Frankfurt. So the business is growing, and I would say it's as safe as any business can be. It's a German company. Germany is one of the most industrialized nations in the world, and revenue is continually going up. So that respect, I think it's as safe as anything can be. In terms of the metals themselves, you could find, for example, indium, let's say, the one I mentioned that you need to swipe your phone, possibly, better technology might come along that will make that easier. So demand then for indium could go down. So you could find one of the raw materials being replaced or being substituted. You can possibly, supply, demand. The US and Europe, they reckon there's a lot of rare earths in Vietnam. They're saying now north of Sweden or the Arctic Circle, there's 1 million tons, down there. In fact, Japan is mining the seabed for rare earths. There's companies talking about mining them off comets in outer space. So they are the backbone of manufacturing in this century. So there's a huge demand for them, and there's a sort of a very manifest, poignant sort of an effort everywhere to where can we get more rare earth. So you will see more come in to the supply chain, but it's just going to take time. This thing in Sweden they mentioned. It'll be at least 15 years before they reach production. Before they're into the market. You'll probably hear in the US of some mines, and Linus Corp from Australia just signed an agreement with the US Department of Defense to build a refining facility in either Florida or Houston, not sure. But this is the US Department of Defense just basically securing their own, never mind private industry. Because one F-35 fighter jet has 3/4 of a ton of rare earths. And there's not one refining facility in North America. So we will see more come into supply, but prices will still rise because, one, labor costs in the US will be more than China. The reason China took over is we know they can do things cheaper, right? But that is not going to work anymore because, they're critical to each nation's economic prosperity. So either way, again, the next 5, 10, 15 years is a very good time to own them. And also, our clients can use our platform, if you will, like an exchange. They can buy and sell. It's a tax-free zone, so they can buy like 10 rare earth metals. They can buy PGMs, the platinum group metals. They can buy gold and silver. They can buy and sell tax-free within, what we offer. So, yeah, and that's really, I think, the risks covered.
Got it. So if an investor was trying to make a decision in terms of, okay, hey, I've made the decision now that I want to hold strategic metals in my portfolio, but do you guys create any, guidance or anything to say that, hey, based on, your risk profile, your timing, your outlook, we recommend like these 3 metals, or, you should just go into one or something like that? How does that work?
We recommend 2 things. One, diversification is purchase maybe all 10 metals, and 2, what we call maybe an extreme view, which is 3 to 5 years minimum, even 10 years. I mean, a lot of our clients now using self-directed IRAs it's a perfect vehicle because they might not, they won't use the funds anyway for 7 or 10 years. But what's interesting is the clients that are coming to us mostly are people who are probably using the raw materials. So for some reason, we've a lot of surgeons, plastic surgeons. I guess they're using a lot of rare earths. Engineers from NASA. We've some clients who are, with NASA, Google engineers. So a lot of people come and they already know a little bit about them, and they probably know demand is sort of increasing. But if somebody's not that familiar, I'll talk privately and individually with each person, and they might like a particular industry. For example, they might say, well, electric cars or solar, this energy transition, there's 5 metals, and I tell them which they are. Somebody might be more interested in, aviation or the space industry. So, but the safest bet, as you know, Dave, usually is diversification, But having said that, if a client knows something we don't and wants to buy just one metal and buy, X amount, we'll happily accommodate that as well. But yeah, we'll usually we tend not to say buy these ones because, to be honest, because the market is purely driven by supply and demand. We really don't know what's coming from one week to the next. They can go up and down a little bit in the short term, but in the long term, the trajectory is always upward. Since about 2010. If you've held them, you might have had some dips, but you would always be ahead.
Interesting. So how would an investor really engage with you if they were looking to, make a purchase into strategic metals?
Okay, so they could go to the website, which is strategicmetalsinvest.com. They can come visit if they want to come to Frankfurt and see the vault. But my suggestion would be send me an email. It's Louis, Louis, at strategicmetalsinvest.com. And I'll happily schedule a Zoom call or a phone call, or just, our first suggestion is for people just to go into information gathering mode, just to, and we'll happily educate people. I mean, a lot of what we're talking about, everything we've talked about, it's not hidden anywhere, but it's sort of hidden in plain sight. But once you do a little bit of digging, you'll see, the dynamics of it. But what we like, first of all, for people just to sort of inform themselves, go into information gathering, and after that, then when they feel they're sort of fully informed from us, but also maybe independently, then maybe start to think about a purchase, and we'll be with them all the way,
Yeah, no, it's such a fascinating asset class, Louis, and all you have to do is look around to see the demand, right? That's increasing, and like you say, I mean, in the 21st century, right, all the metals that are going into all of the products that we're using, and with technology advancements, that's only going to be accelerating, over the next 2 decades. So what would you say if you could give only one piece of advice to our listeners about, how they could accelerate their wealth journeys? What would it be?
Good question. I don't like to, the expression, advice is the worst advice, I really don't like to give advice. But I suppose if you're asking me if there was one word, I'd say diversification, I'd always come to, my first purchase was property. When I was in my early 20s, 23, I purchased my first apartment, and I sort of honed in on property for about 10 years and bought properties in Ireland and in Germany and Panama. And then I think I got a bit more curious maybe and learned a bit more, maybe a bit more educated. I'm always, diversification. And, I think that at any given time, there's always a niche where there's a product that's coming in or maybe already exists where the demand is increasing and the supply is limited. I tried to stick to that little formula, which I found in the metals. I'm also into agriculture as well, but it's the same sort of red thread that runs through everything I do, which is, demand and supply. And there's always sort of maybe one door closing, but usually another one opening. But yeah, diversification. Yeah, I don't think. It's up to people's personal preferences as well. They get a good feeling about a certain asset class, So yeah, definitely diversification.
Sure. Yeah, no, if you don't call it advice, you could call it insights, right? But, part of our mission on the show is really to, try to help investors get these unique insights from, people who've been super successful investors. And it is always fascinating to look at different asset classes like, strategic metals. And then you've had experience in other asset classes, and what are the parallels, right, that even stand out between the asset classes? What are the things that we can kind of take away to become better investors ourselves? So point well made in terms of diversification, right? I think that's key. And then that's even a subset, right, that you talked about earlier in the strategic metals themselves, is diversifying even within the asset class. So amongst asset classes and even within the asset class. So really appreciate your thoughts today, Lewis. Super, super interesting asset class, something, that I think people should kind of look at and consider in terms of their portfolio. But same thing, we're not offering advice on our show, just trying to provide some different insights and ways to think about it. And then can you just throw out one last time the best place for folks to find you?
Yes. My email, Louis, Louis, at strategicmetalsinvest.com, or they can just go to the website, again, strategicmetalsinvest.com, and they can download a digital prospectus. And if they leave their number or email, I'll get back to them and mention they're on the show, or that, if they came through you, I'll be happy to take care of them.
Or probably at the local pub in Ireland, right?
Well, yeah, I knew we'd have to talk about the pub at some point. So yeah,
you're Irish for sure. So, Lewis, thanks so much for coming on the show and really providing great thoughts, to the audience, and look forward to keeping in touch.
Yeah, thank you very much, Dave, for taking the time. And as you said, even just having a conversation like this and taking advantage of the technology we have, to talk about stuff like this is a great service all by itself, even if, it's just good to be getting the information out there. So thank you.
Awesome. Thanks again, Louis.